All right. Good morning, everybody. So we're waiting on some critical note, the 10-year today, and then tomorrow we've got the CPI. So it's kind of this wait and see, but the market's not waiting. There was some little bit of fireworks earlier with the MBA application. We had this nice little pop around 7 o'clock. Really keep your eye on those bonds. I think they're going to be the driver today. We did not see them come in to participate at all yesterday, but when when the bonds started coming back above that critical level, that was a really good thing to see. And if you didn't watch my stream yesterday, you might not understand what that critical level was. But take the 30-year bonds and go out and look at the higher time frame. You'll see there was a real structural low that was kind of a make or break situation. It's all about the data in the next 2 days. So just want to, approach this rally with a little bit of caution. It is good. It's really good news to see, especially considering how this rally came in yesterday, starting at a time where we normally wouldn't see a rally begin. I was actually live streaming when it was unfolding, and I remember saying this: don't trust this rally. It's beginning to rally at the wrong time of day, and if it's not connected to news, then it's just going to fizzle and fall apart and fall right back into the range. And it didn't. It just kept on going because it was directly connected to news. That's the difference, being able to distinguish, okay, hey, price is doing something different that it's not supposed to do, and take advantage of it. Absolutely. But, it stood out as doing something completely outside the norm. And that's where the advantage was yesterday, being able to recognize that we were in completely different marketplace, seeing something that very, very rarely happens, and then just taking full advantage of it. Without recognizing that swap difference yesterday, you would have continued to try to fade the plays and it would have just ran you over repeatedly. All right. So we do have a couple of high impact expectations for the day, not a whole lot. We also should have uh, the USO play around 10:30. That's when we get our oil report, Wednesdays 10:30. But we'll come into the market watch and see that EIA petroleum status report 10:30. So we got wholesale inventories, PPI, the 10-year auction. Now that PPI is not ours. Don't worry about that one. It's another nation after our day is done. So 10, 10:30, 1 o'clock. Watch, watch that clock, guys. That thing is one of the best indicators you could ever have. We do have the 50 period over our head to be concerned about. We've got an ADR of 2.23%, and we're not even up 1% yet. So there's plenty of room to go. We did make it out of this range that we've been struggling with. The question now is, can we keep it? We're up off of that blue line, which is the 10 period. We have a MDP at the moment. That's a missed daily pivot. If you don't know what that is, you can hit it on YouTube. There are plenty of videos that talk about what a missed daily pivot is and how we would use that to at least evaluate the market, let alone trade it. It gives us some perspective on the day. Prices hit their pivot more than 80% of the time. So when it doesn't hit the pivot, it's kind of in that 20%, right? It's not rare. I wouldn't want to say that, but it stands out and there's opportunity there because of that. All right, looking at time and price. You can see that we spent a considerable period of time last Wednesday up along these levels, and there is some volume there, right? But Look at how much time we did spend, right? It wasn't very much in the last 10 days, which is what this chart is looking at. We have some time there considering, there's a lot shallower places down here. So we did spend some time there. We do have some considerable volume. This is going to be old volume, some resistance like volume nodes. It's just going to be a little bit of a struggle to get through it. We went through the shallow area, right? Relatively easy. The easy part's done. Now it's going to have to work for its money. We are still inside the box, plenty of room to the top of the box, and we are underneath the linear regression line. Plenty of room to get back above it and swing to the high side of it, right? Think about the old TikTok pendulum clocks, right? With the spoon underneath it, goes left and right. Well, price is going up and down, up and down, up and down along that line, right? So we're just coming back up inside the line. We're above the point of controls on each one of these, so kind of keep that in mind. And yeah, I mean, the target, at least for the end of the week, is going to be back up to the top of the box with the little asterisk that says if, right? If the econ isn't bad and dumps us back down again. Something to go in and evaluate if you were struggling yesterday in trying to trade that really beautiful price action. This is the advancing issues of the S&P. This is the advancing issues of the NASDAQ. Notice that I'm not saying advance versus decline. If you're looking at something like the NYSE and its 2,500 products, you may want something that is taking the advance and subtracting the decline from it. But when you're looking at 100 names like the NASDAQ, do you really need the declining numbers? Because, dude, if 60 names are going up, what the heck do you think the other 40 are doing? They're not going up, right? Do you really need the advance versus decline? Keep it simple. Go back and evaluate what these looked like yesterday when that move really started to kick off at 10:30, 10:45. Right? We're looking at how many names, how many companies were moving to the upside in the S&P 500. How many names in the NASDAQ 100 were advancing? How are you supposed to trust the rally if you don't know what's rallying? Tick, trend, AD, UVOL, DVOL, advanced decline. Go back and take a look at those and find a way to reevaluate that move that we had and find some way to trust it. Because if you can't find a way to trust it, then the next time it's going to come along, you're not going to be able to make an informed decision on that one either. Oh, gee, it's starting to trend. Should I take it? I don't know. Is it gone too far? I don't know. Should I get in now, or is it too far to get in now? I don't know. For the NASDAQ, we are back above the 10. I was wondering if we were going to make that or not. Yay, we made it. Still got the 50 overhead. We are also back above the weekly floor pivot. So if we were to take the high-low close of last week and get a average price from that, right? High-low close divided by 3 gives us last week's average. We just got back above last week's average price. Cool deal. We also have a missed daily pivot so far. See if we can keep it just like we had one back here, right? Critical levels. We have a time area here that we're back above. We have some volume area there. We're above that. So we're going to be looking for that to provide a little bit of support, especially as we have this news coming in this morning and then as we come into the open. So we really don't want to see it breaking back down below 8,500, right? 8,500, 14,850. Stay above that. Then it starts to shallow out again. So if we can get above 14.5, we should have a nice clear run up to 14. Well, heck, up to 15.1, really. Maybe 15.050, somewhere around in there. Got a nice shallow area. You can see how we move through these shallow areas really quick. So be on the lookout for that. We are up at the top of the box. Keep that in mind. We're at the value area high. We're above the point of control on both of these. Once we are above the value area high, it's really important to keep your eye on it, because we want to continue to ask that question: am I moving towards that line, or am I moving away from that line? Right? Am I moving towards that pivot or away from that pivot? We've got an ADR of over 3%, and this market is only up around 1%. So we got plenty of room to go. I don't think that we could hit that 50, but if we added 2 points to our current move, that would put us at 15.2. And that would still not be considered an outsized move. It would still be considered normal. Bring it out to the daily time frame for a moment. Realize that that weekly expected move is over our head, but within reach, easily within reach. If we were doing a little bit of a minor trend count, run an hour, which works really good for intraday trading. Look at what we have, right? Higher high, high low, higher high, higher low, all the way up, right? We have no warning candle, no reversal candle, no inside candle. One time, one shot, right? All the way up. So look for this to end for a pause play, reversal, any kind of warning. Keep your eye on the clock. All right. So the other day we talked about the new watch list, how we went over to the CBOE and we downloaded the data for the most traded companies in January, and then sorted those companies out, just keeping basically the top 100 names, which isn't bad. But I'm putting together a new protocol play, and that wants you want something like that to focus on the top most liquid names, preferably with the highest cap rating in their sector. So I went through last night: energy, finance, technology, utilities, just went down the sector list, pulling out the top names in that list, which ended up knocking the list down to around 45 names. Right. So this is like the benchmark watch list, 45 names. From that names, we already know that they're really liquid. So from day trading perspectives, their options are really, really liquid options. But what about swing trades, right? It's more than just liquidity when it comes to swing trades. We also have to have some kind of gauge about it's the health of the company, right? It's fundamental analysis. And one of the best places to get fundamental analysis is from Investors Business Daily. And they have a screen where you can put your own watch list in it and then filter them uh, by their fundamentals, right? And they've got this one rating called the composite rating that basically summarizes all of these other ratings that are on the right side of that column and kind of gives it a grade. Right? 99 is like the highest you can get, and then it just goes down from there. So out of these 45 names, this would be the benchmark watch list on a day-to-day basis. Super liquid options, uh, various price ranges, and then adding to that the ability to sort them by how strong their fundamentals are, right? And then from this list, it's a short list. You go through it every single day looking for IX10, trendline breakover, bear pennant on the higher time frame, 52-week breakouts, right? And it saves you from trying to look all over the internet or sorting through 600 companies that have weekly options to get to a point to be able to find something that is liquid enough and has strong fundamentals. I'm going to be sharing this at some point in the Discord or maybe in the Thinkorswim workbook. Probably not the workbook, since that's a public place and the Discord's not. The list will be sorted in there, but not this with all of its fundamentals, because these fundamentals change. Just the shortened list, the 45 names. Which means when we're running the high-low graph scan, you would want to adjust that scan to perhaps focus on these names rather than just all of the 600 names that may have, uh, a high-low rank. I did a video on the high-low scan, the high-low graph, and the high-low scan import link. The video explains what it is. This link is the scanner itself. These are both found in the Discord. So if you go to the pinned messages, you'll find it. Right? Go over to the bullish bears, go to the large caps room. You see the pin in the upper portion of the Discord. Click on that, and you will find different bits of material that we thought was useful and pinned in there, including the high-low graph. So you can just hit jump. It'll take you back into the chat of when that was shared, and right underneath it, the link for the scanner was also shared. That's where you'll find it. You want to take that and then adjust it to the new names. Right? And like I said, I'll be sharing the Thinkorswim list with these new 45 names. And it's going to change every month, right? These are January's most liquid names, and then sorted the way I was just talking about. All right, we got the S&P 500. We first want to filter that down. We don't want 500 names. We want around 100 names, which is hard to hit. So, don't struggle with it. Get close to 100, call it good. Now, we want to change this to pre-market change percent. We got a lot of gray in here because it won't respond until the market's moved at least a 0.5%. So we want to adjust that, do that here. Now we've got a little bit better perspective of what's going on this morning. You can see we're on a risk on situation, right? There are a few minor sectors a little weak. Otherwise, every single sector, every single industry is kind of lit up like a Christmas tree. Bring that over to a different market. We go to the NASDAQ 100. We don't need a filter here. We'll just knock this down to pre-market change, adjust the color scale. Okay, we got a little weakness here in the chips, Adobe, Inuit, a couple other names in there. Maybe, kind of approach those with a little bit of caution. Bringing it into the scanner itself, this is where we can ask a more specific question. And it's very important in this, right? Because if we're going to go into the open, you want to be able to quantify, could today be a trend day? Could it be one of those rip your face off rally days where it just opens at the gate and runs like a mad demon? Well, one of the ways that you can quantify that is by having a static number to begin with. Because if we go into the open with 70% of the S&P open and gapped and bullish, you would definitely want to approach the market completely different than if we were going to the open with 10 names. So the question here is, how many names in the NASDAQ 100 are up at least a 0.5%? Almost half the NASDAQ. So let's tighten that up. Let's put it to a 1%. How many names are up in the NASDAQ? At least 1%. 30% of the NASDAQ this morning is up more than 1%. That's pretty bullish. And it's not overly bullish, right? You do want to be cautious of that, because you go to open with an AD or, advancing issues sitting in the 90s, then it's very likely we're going to flip over and tumble back down again. Same thing for the S&P. How many names in the S&P are up this morning? At least 1%, 15%. Now, when you're looking at those names, you do want to keep your eye on what sector and what industry they belong to. Look at their peer groups. Because if this thing's already up 1%, I may not be interested in trading this. But what about its peers? That would also be the time to go out to the higher time frame. Look for any daily chart signal for your intraday play. Red to green, IX10, trendline breakover, bear flag pennants. Look for continuation patterns from yesterday's explosive move, right? There's this logic that says what is in motion will continue to move in that motion until external forces, stop that motion. So if it's got a strong breakout with strong liquidity, strong flow, we would expect it to continue today as long as everything else is continuing to flow with it. Right? A lot of these names are only going to move in the same direction as the S&P or the Nasdaq. All right, looking at the sectors this morning, the ones that are down make sense. USO, natural gas, gold. You start going past that. Notice the energy's basically flat this morning. We want to see a little more out of energy. The devil's metal, silver, slightly green. You start getting into healthcare and it starts to pick up a little bit. We're still not yet at a 0.5%, but working on it. You can notice there were higher highs earlier in this, but it's already started to fade back down. Gets us through utilities into the bonds and emerging markets. This is the risk on gauge that I use for global participation, right? If we're really bullish, we want to see that bullish participation from around the world, and this is the gauge that we use for that. So seeing it positive above at least a 0.5% is another check mark towards a really strong open this morning. Consumer discretionary is looking pretty good so far. Um, there's not a lot to that yet, right? You notice a lot of these were just one little ticks. So we want to start to see some real flow coming in on these. We'd be looking for something like that in, in the next hour. But we still have the bonds and the dollar to open. Airlines, cloud computing, marijuana is looking really good this morning. And then technology is basically leading the way, right? And semiconductors. Now, from that though, there's a lot of names missing in there. There's a lot of sectors that just aren't really represented in the old school S&P, like crypto. So you can see the crypto's looking really good this morning, right? Notice the crypto names here aren't coins. They're companies that are heavily invested in coins or companies that are heavily invested in blockchain. So crypto's up this morning. The EV market is another sector that's not well represented. So, we had to put together our own EV sector. That also is doing really good this morning, really strong. Uh, a few names that are a little weak, like GM is kind of flat, your old school legacy autos, but not Ford, right? A couple other names too, good follow through in Tesla from yesterday. So everything's pointing to a real strong open. I'm going to add one little note of caution on this before we wrap up. There has been plenty of times where we've had a really strong gapped up bullish market going into the open, and we're all approaching it with this strong bullish sentiment, and we look at all the data and we say, oh wow, 80% is up and we're super bullish, and we got EEM, we got all these things, and rah, we're real bullish. And in a bullish market like that, we have an expectation that the market will open and start to move down to close a gap. And we think, well, it's only going down to close the gap. We closed at 4 o'clock down here. We're expecting to go down there to close the gap. It's only going to go down there to do that, and then we're going to resume our bullish nature. And it doesn't. It just keeps falling and falling and falling and falling. And you're still looking for the turn to go back up. Don't do that. Keep reevaluating through the morning. Are we still bullish? Do I still have that expectation that I should be looking for bullish trades? Don't get caught in that last hurrah either. So this is one example where this one actually faded down before the open. But there are other examples where we have that bullish nature going into the open. We get one last pop, one last hurrah, and then the rollover, right? Like blow off top patterns. So as we come into the open this morning, even if we're carrying through from the bullish open, we've got the bonds opening, the dollar opening, got data coming in. We start to rally into the open. Be really cautious looking for that reversal, right? Just putting it out there that you know it's easy to get sucked into this whole bullish notion that we're going to just continue this amazing move from yesterday. All right, guys, be careful, be safe. I will be streaming in the large caps today, so I will see you all there.